Okay, hello everyone. I had a comment on my video this morning that VTX Trading was asking, can you do a video where you move from higher time frame to, I suppose, the time frame where I execute? Okay, so I'm going to show what I did Friday because I think it's a good day to showcase that, going from higher time frame to lower time frame. One thing too I want to point out is it also depends, what do you mean by higher time frame? So what is to you is a higher time frame? Me personally, I don't even need to look at the daily chart for some of my trades. Uh, I I don't need to look at the weekly chart for some of my trades, and I know some people that might sound, you know, crazy, uh, but it's just the way I trade. It's just me. I sometimes take trades on the 15 seconds chart. I'm not a day trader. I don't hold my trades all day. Some trades I could do a day trade, but usually I like to just get in there real quick. Most of my trades I prefer to keep them 2 to 5 minutes, just get 15 points. But I still include the daily chart in my analysis because again, price and time are fractal and it works the same. And so I just look at the daily chart as well because it's just something I'm interested in. But it has nothing to do with my execution. Like I'm not using the daily chart necessarily to execute, as you'll see. Okay, so we have a daily fair value gap here, and note that underneath this, there's nothing to balance out other than this low down here and then more fair value gaps lower. So you can expect this area to provide some resistance when you get here, especially being since it's a Friday and we have NFP and we've been moving lower all week. Okay, so this could set up for next week to go higher and then come crashing down eventually, leave the swing low here. And so we'll see what happens next week. However, I'm just letting you know that price had dropped down into the daily fair value gap overnight. So this is that daily fair value gap in blue. Asia didn't really do anything. London moved lower sluggishly, and then NFP, boom, we distributed higher. I was looking for these relative equal highs. I think that they could probably still get hit. It ended up hitting a rejection block on the 15-minute time frame, and then it went lower as like a retracement. Because you see that it didn't really retrace here. It just manipulated and distributed. So I'm expecting a little bit of a bigger distribution if we use this to go higher. We'll see what happens next week. Again, I don't want to really forecast anything right now, but this is the 15-minute chart for reference. So yeah, there was a rejection block. This yellow zone, I have no idea what that is, but on my video Tuesday, I believe on Wednesday, it was on my chart and price was referring to it. And for the love of me, I kept trying to figure out what this orange gap is. I don't know. I just left it on there because it was on my chart. So the rejection block though here in purple, I should have shown it. It's a wick, basically like the body to the wick high. That's a rejection block of a previous high, and we just kind of hit that, went lower, and it's just kind of like distorting time. So there could be a lot of liquidity up there next week that we could see and reach for. There's also a 15-minute breakaway gap. Now notice how in the same way that the daily chart reached down here, it also reached down into this gap. There's nothing else lower other than the rejection block here that it can reach for. And so the wicks and the bodies perfectly touching that high, the fair value gap. It's just nice to see. And it doesn't really kind of just moves into the range you had left in the early afternoon. So now I'm going to refer to this chart often in every single cycle I trade. So when a person asks me to show a higher time frame to my lower time frame, this is it. So I'm using the cycles, the 90-minute cycles, which you could say is the 15-minute chart or the 5-minute chart, to get down to the 30-second, 1 minute, and 15-second chart to look for these small scalps. And I break because time and price are fractal, right? Time moves in a set of cycles. That's fractal. Again, it's going to be a different cycle depending on how many times you want to break it down. You can go from basically I take a day, I break into 4 sessions. So Asia 18 o'clock to midnight, midnight to 6, 6 to 12, 12 to 6. That's 4 6-hour sessions. I break those sessions into 4 quarters, and those act the same way as the quarter one of the whole fiscal year. Quarter two, quarter three, quarter four, we have Christmas and all that. It's just the exact same thing, and just the different length of time that it plays out and frequency, the amount of times it does in a year. And I would look for accumulation in the first quarter, manipulation, distribution, and a reversal or continuation in the last one. It doesn't always do that. Sometimes it'll just continue going straight up, but here you can see it happens very nicely. The red accumulates, green manipulates lower underneath that red. That's NFP that drops it one more time. It could be tricking people into shorts, and you usually have a 2-stage event where it's going to turn, it's going to go higher, and it also leaves a breaker behind. You can drag that breaker out too and see that price came back down to hit it. So that breaker is just those up close candles that was before the run on sell side liquidity. So we made a low and then we made a high, and those are up close candles, and then we made a run lower to sell side liquidity. So low, high, lower, low. That's how I see it, and that qualifies the breaker. Price leaves it, comes back to it. Now it's support, runs higher, reverses, consolidates, manipulates lower, and then this is the end of the day. So this doesn't really have much steam to run higher, but if price was a 24/7, I would want to see it continue going higher. And so I'll start by breaking down, or actually I'm gonna go straight to the afternoon. Actually no. The afternoon is really the trade. I'll talk about the NFP, and then I'll go to the afternoon, and then I'll talk about the blue cycle, which distributes higher. So NFP, again, I'm looking for the AMD model. So accumulation, manipulation, distribution. So we have accumulation, Q1. Q2 doesn't really manipulate. That's because there's NFP. So NFP kind of does the job. It more so accumulates, and this is where you're not always going to see the red accumulate and then green manipulate and blue distribute. You're sometimes going to have a bit of coloring outside the lines where blue, because the news, is going to do it for the green. And sometimes, and I'll explain the morning why, it just continued going straight up and didn't manipulate in the lower time frame on the smaller cycles. So, but you can see how, these cycles, we still distribute and then we reverse in the purple going into the next one. So this is the way I view price. Okay, I wouldn't trade the red one. I would trade the green one, look for longs, and then the blue one I would look for shorts. And the highest probability would be the blue one, because again, the blue one, I'm expecting the green cycle on the 90-minute green cycle to go lower, manipulate lower. So if I'm looking for that, I would look for the distribution cycle, which is oftentimes most likely going to be Q3. So that could be your model. You could say I only trade during Q3. Distribution might happen during Q4. It might happen during Q2. It might even happen during Q1. Okay, a continuation from the previous quarter or higher time frame, 90-minute cycle. But most of the time it's going to be on Q3. And so you can just set yourself up and see if you see that accumulation manipulation, that could be a model within itself. But you're using the higher time frame to qualify, because you're saying that this 90-minute cycle should go lower, and so I would then break down this 90-minute cycle into 4 more quarters and trade. I just simply go short, put a stop loss of 20 points, take profit of wherever, whenever the green cycle, either you can do a turtle soup or order block, it forms an order block or an inverse fair value gap, right? Like you could have done that inverse fair value gap there. NFP would have taken you out, but obviously I'm not saying do that because it's NFP, right? But yeah, so just remember this logic, because then it'll be easier to understand the next cycles. So I do show some executions. This is the afternoon trade. It's a very small trade. Again, I'm not a guy who, when I trade, my funded account or unless I'm paper trading and I'm doing like a case study and I'm recording it and it's like a let's just see what happens here, and it's just complete paper money, I would hold for longer. But I'm a guy who just likes to hold for 15, 20 points. Most of my trades are just a couple candles, and I I don't have big kill zones. I don't just trade whenever. I have specific times I like to look for trades. So this is the let me go back to the 5 minute chart I said I would refer to often. So lunch went lower, and then I'm looking for that breakaway gap. I'm not really looking to go higher here because it's the end of the day and we had NFP in a huge range in the morning. So I'm not really looking with the way how deep lunch are traced. I'm not really looking for higher prices yet, and so I was expecting this to manipulate and set us up for the last hour. If we were gonna do anything, if we were gonna continue expanding, it would likely be during the last hour. And so I looked for shorts up here, okay, and then you go to break this down. So you see coming into the 13:30 to 15 o'clock cycle, I'm splitting up into quarters. I see consolidation, okay, and then a bit more consolidation, and then I run higher. So now I'm using the higher time frame, the fact that lunch is retracing on itself. There's an order block here, and I actually don't do it here, but if you drag that order block out, you get a nice, it kind of touches it just a little bit, the body of the candle, and it rejects. So we're rejecting off of an order block. We have a breakaway gap down here. We don't really want to expand much because, again, we are the end of the day and we had NFP. It's the end of the week. Not many people are in the markets. It's not like the markets are trading tomorrow. It's going to be the weekend, so there's not much activity going on. So we also get accumulation and then a manipulation. So right there, I'm like, okay, because we're forming this order block off of a higher time frame order block, and I wish I showed that order block here. I think no, I don't do it there either. Okay, this is the order block I was talking about. You go down to 1 minute, and you see how it's forming a smaller order block. The same thing as that up close candle here on the smaller time frame, and then this is where I went short, and I knew that the Q3 would distribute lower because we had went higher during Q2. But why did I know that it was accumulation, manipulation? How did I recognize that? Not in hindsight, but ahead of time. How did I anticipate that? Right, when I went short up here and bought down at these relative equal lows at 15 points, is because I was using the higher time frame, and I knew that we had retraced on lunch. We hit the 15-minute order block. Where's the 15-minute chart? Yeah, we hit that 15-minute order block, and if we were to go lower, we would want to go down to this breakaway gap because it's the end of the day and there's not really much to do. If, however, let's just say we wanted to go higher. All right, if price wanted to go higher, what I would have wanted to see would have been accumulation, but not up here. I would have wanted to see accumulation and a discount, or more towards equilibrium. I would want to see price in the Q2 reach for lunch lows. I would want price to take out the lunch lows, and then I would have wanted price to move higher during Q3. But you see, instead, it takes out this consolidation highs, leaves relative equal lows down here. This is a breaker, and you see this is not support and resistance. This is the breaker that is being used as resistance. And in the execution, you can see how I have two blue arrows. So I sold 5 micros. You see here 5 micros, and I bought 4 and bought 1. So the reason why I bought 1 was because, 4 not 5, is because I wanted to leave a runner to lunch lows. And you see that little candle after, not that candle, sorry, the candle I bought on. So price took a while to, as soon as Q3 happened, it was fast and it got down there really fast. But when it got down there, it went all the way back up, made that high, and it didn't speed past those equal lows. And because it didn't speed past those equal lows, when it came back down to the equal lows, I just closed the position completely. And I said, you know what, I was also preoccupied with, I was going to do my taxes and stuff, so I said, you know what, I'm not gonna sit here and watch this run all the way down here. It would have taken like 40 minutes. I'm not gonna do that. This was a 2 minute trade. I have $30 in play. I'm just gonna take that $30. That's a dinner. That's a nice dinner for myself. And yeah, I took that and run. Could I have held it? Of course. It still went to lunch lows. Was I mad about it? No. The amount of times it bounced and didn't refuse to run during Q3 after it had initially taken out those equal lows, and just kind of reaccumulated to continue running into Q4 some more. And then that's a nice entry there too for during Q4, since you know that now there's no manipulation that needs to be done. The manipulation has already been done. There's sell side liquidity down here. Okay, that's a nice and easy gap that should not get filled, right? Because we've already retraced, we've already left. We wanted to expand on the 5 minute, on the higher time frame. We wanted to show a down close candle to go lower, right? And take out sell side liquidity. If you're expecting that, you don't really want these gaps to fill. You don't want price to spend much time around there. So for my other execution, you see how I got in here, got out for 20.25 points, and then I sold one more a bit higher, about 25 points, and the other one moved my stop up to about 15 points. So it was like if it came back down there, and it kind of went a couple ticks underneath my stop, but it's okay. I wanted to sell everything else. I actually would have gone stop down anyway because I had my sell limit at the buy side liquidity. So yeah, it was about equivalent to as if I had sold everything at 20 points anyways. But I'll show you this picture. It's easier to see. So yeah, we manipulated. I'll go actually back to the 5 minute chart. We manipulated in the 7:30 cycle, and now we're expecting the 9 o'clock cycle, the 90-minute cycle, to distribute because we have that clear manipulation over here on at 8:30, and we have like two opens. We have the because usually what's gonna happen is you're gonna have 9:30 open up, all the volatility is gonna be there, price is gonna have consolidated ahead of 9:30, and price is going to make a Judas swing at 9:30. Now ask yourself this, ahead of 9:30, do you see consolidation? No, you don't see consolidation. And why is that? Because there was NFP. So because the NFP had made that manipulation and then started this run higher, going into 9:30, you see no accumulation, right? No accumulation. So when price speeds up at 9:30 and it continues going higher, what is this move lower? Is this an entry short? No, it's just reaccumulation. This is just reaccumulation. So it's accumulating here to go higher, or making that, I guess you could say bull flag? They call it a bull flag in the retail industry. So I guess it's making a bull flag. Okay. Now, sometimes shorts might work. Sometimes they might run that short-term low, but this is a big drop. I don't think so. It was 10 o'clock news, and notice how it reaccumulated ahead of 10 o'clock news. When 10 o'clock hit, price ran, it sped up, and I wasn't trading ahead of 10 o'clock. I could have went long, but it ended up speeding up higher, and then consolidated a little bit, dropped again, and I went long on that order block. Again, I did not think that this was institutional order flow entry drill. I didn't think this was a 2022 model, because the logic is that we have a higher time frame level. When the Q1 has expanded, the Q2 has expanded, the Q3 has expanded, and we had accumulation, redistribution. Where are we distributing to? There's higher time frame at the high of that purple gap. There's the higher time frames buy side liquidity. That was my bias from the higher time frame. Wanted to expand to there. We've seen manipulation on the higher time frame. We've seen no manipulation on the lower time frame inside these last 3 cycles. So what would cause this to go lower? There would need to be a reversal, and that means there would need to be manipulation. Do I see manipulation here? No, the manipulation was exactly what I was trading. I was trading the manipulation and then the continuation here into the next cycle. Boom, that's right there. This is that manipulation and accumulation, manipulation, and then distribution. Right? Instead of manipulation, you can also say it's redistribution. But this is where we've had that reversal. Price starts to lose steam, and then bam, it goes lower. Okay, me going short off this would just be not gambling. If it would have worked, and maybe that's my model, maybe this is a 2022 model, and that's my model. And even if I think it might not work, I still am gonna take it because that's what the rules say. Yeah, I get it. But if it would have worked and I would have taken that, I would have just gotten lucky. So instead I went long here with 10 contracts. No, wait, 10 micros, right on the candle after we hit that order block, and then took profit around these highs at 20 points, or most of the profit. So yeah, this was all the executions that day. Yeah. And VTX, so thank you for commenting. Let me know if you learned anything. If you want me to take videos of anything else, I'd be happy to do so. I wouldn't have posted this video if it wasn't for your comment. So yeah, it just gives me more excuse to post more videos. Thank you very much.